Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. Somasundaram, PR, Managing Director, India World Gold Council, joining us. Welcome to the show, Mr. Somasundaram. My first question coming to you is, very rarely that we've seen that the equity markets and gold as an asset class move up together. What is it that's driven gold like this from the lockdown to now?
Well, it is much easier to explain gold than to explain the stock market now, honestly. If you see, go back to gold 18 months ago, July, August 2019 is when we started gold actually, gold prices shooting up. It was to do with the interest rate across the globe, primarily driven by the Fed stance on contraction and supply. So when they said that we are now going to have monetary easing and they started cutting rates against the previous 8 quarters when they said we are going to keep raising the rates, I think that turned the tide in favor of gold. And since then we saw gold going up. Of course, Diwali softened, which is the normal stuff. And then we saw in 2020, it remained high, but then it started shooting up soon after the COVID. Essentially, that has got a lot to do with how investors perceived risks in other markets, and therefore gold had a story to tell, essentially. We saw the ETF inflows rise. When it comes to the stock market right now, it's much more difficult to say. Yes, there is a lot of optimism around economic recovery, but still people haven't seen it. There are different views about the time that will take. Nobody doubts the fact that every economy will come back, but the time taken and the impact that the lockdown will have had on many parts of the economy is still not very clear. So yet you see the stock market going up. It's a lot to do with liquidity flow, enormous amount of liquidity that has been pumped into the system. Therefore, that explains the stock market. But when it comes to gold, clearly the ultra low interest rates and the uncertainties in the market, which are the usual factors which drive people to a safe haven like gold. That's what is driving gold.
Absolutely. And with this, another question that arises is that in spite of the way prices have gone up, the demand has gone down in 2020. And yes, of course, it is COVID that impacted demand as well. However, the investment demand did go up in 2020 itself. How would you describe this phenomenon?
Clearly, you will see this playing out year after year. When prices go up, consumers tend to remain on the sidelines, hoping that this would come down. When I say consumers, the jewelry consumers across the globe. And we saw the same thing happen. On top of it, we had COVID lockdown, so that was a double whammy for the jewelry demand this year. So there was nothing very surprising about it. Clearly, investment demand acted out exactly as it should. Investors saw faith in gold. They saw that the ultra low interest rates is not going to go away in a hurry. Therefore, you saw a 49 billion inflow into ETFs, highest ever in investment demand. And that kept the investment demand up. On top of it, many markets, I'm saying Asia, Europe, and US, you saw when the lockdown eased up, we saw the demand for bars and coins also go up. And that's very typical because people would like actually to move into safe haven, and it is not just through ETFs. So that got played out in the market. So there was nothing surprising about investment demand going up when consumers of jewelry remaining in the sidelines, hoping that the price would come up. Consumers would like to be doubly sure that it is not a blip, that they don't go and spend money when in a couple of weeks the price remained high, and then you see that the prices come down where they could have got more jewelry. So they wait in the wings when it comes to this kind of sharp increase in prices.
Right. So have you, when you talk about demand as well, yes, the quarter that's April to June, and then the second quarter after that, the demand was low. But on the back of the festive season, on the back of the wedding season, have we seen a trend where the demand with regards to consumption has increased? And are you expecting that to continue?
Yes, absolutely. We saw that the fourth quarter, when the lockdown was a lot less rigorous, I'm talking about India, but the same story plays out in China as well. We saw that demand was much better, particularly bars and coins in India was up 8%, and jewelry was still down. But overall, demand was down only 4% in quarter four. Whereas if you take the whole year, demand was down 35%. So you can see the difference. The whole year saw a drop of 35%. When I say whole year, the calendar year. The fourth quarter was only down 4%. So clearly the fourth quarter was one of the best quarters, essentially. And that has to do with the fact that there were festival seasons. People wanted to get the life back. And on top of it, you also saw the lockdowns were eased and jewelry traders opened their shops.
Right. And then with this, how likely is it that the demand that India is creating is going to come ahead and support gold prices? Because we are one of the largest consumers as well with regards to gold.
Absolutely. One very important fact I want to place here is in the short run, demand doesn't drive price. Price drives demand. Demand has very, I would say, minimal impact on price in the short run. It's to do with interest rates and liquidity in the market, okay, particularly the Western markets. That's what drives the price. So you have to look at the futures market more than anything else to see how prices will play out. So in the short run, demand is a reaction, not a cause of the price influence. Having said that, in the medium and the long term, demand has a very, very significant role in determining the price. There is no doubt about it. So when it comes to the demand as such, we think that in 2021, demand will come back. Of course, it is subject to very many factors. As you always know, it's too early to tell, but early signs are very, very promising. You had a duty cut. You have, the jewelers, the imports have gone up. Jewelers are opening up the shops. You have seen trade events coming back, buyer-seller meets, etc. All these are signs that the industry is coming back to life. And the economy is definitely, certainly looking for a very fast growth, which is again a very, very significant factor for gold demand. But you still have a long way to go. You have to see how monsoons play out this year, how the inflation plays out. It's very, very important to understand, so much liquidity, what happens to inflation. Right now, it's all very nice to see the stock market going up because of liquidity, but is it going to do anything to the prices? We are well under control, there is no doubt about it, but still you have to also look at global inflation, all that stuff, and how it plays out in India. It's too early to say, but as I said, signs are very, very positive.
Right. So, Mr. Somasundaram, from here on, is it right to say that the gold demand will be driven from a consumer point of view or from an investment point of view?
I think you will see this both streams running parallel. And as and when the prices, it also depends on the price behavior. As I said, prices have softened in the last few days, and you will see therefore consumers getting a little more favorable towards jewelry purchases. But prices might again go back, and you may see investment becoming more explicit, and people probably choosing bars and coins because it has also got a low conversion charge, right? So if you have a certain amount of money and you want maximum gold, a jewelry will come to you with a certain on cost on this. There is a gold price and then there is a conversion charge, which tends to be slightly higher. Whereas a bar and a coin comes to you at gold price plus a very small conversion charge. So people who don't want jewelry in the short run will tend to go for bars and coins. So you will see both these streams playing out, but at what point of time, which one takes the lead, it's a question of short-term factors at play.
Right. And overall, in spite of the pandemic, we had, last couple of months seen that the demand with regards to rural India had continued to remain strong. It was mainly urban India where the demand had gone down. Is that the trend which has continued, or you're expecting a reversal on that front as well?
See, rural demand always drives gold. There's no doubt about it. Our analysis although there are not exact figures about the location of demand in this country, several studies have proven that 60% of gold demand comes from rural areas. And then if you remove the geographical split, we also know that 60% or so of jewelry demand comes through weddings.
Correct.
Okay. And there we don't have the split between rural urban, but you can assume the same things plays out there. So rural always plays a very, very significant part in many, many consumer industries, and so does it in gold. It's also to do with the fact that the bank penetration is much, much lower in rural areas. Therefore, they tend to use gold as a form of, in a sense, currency, taking loans and all that stuff. So that will continue, and it was therefore very good when you look at the rural growth. Clearly, there was support to gold. Having said that, lockdown affected everybody, but the comeback was faster in the rural areas. There is no doubt about it.
Right. And if you have to look at a global picture to understand how gold prices and the demand would move, what's happened globally is that in terms of the economy, we are well below potential. Gold prices have been at historic high levels. And on the back of which you see the consumer demand that has remained subdued in other regions as well. So if you have to take a global picture into consideration, what is the kind of correlation we could bring about with regards to demand and pricing?
Well, as I said, demand in the short run is more a reaction to price. Price is determined by interest rates, global risk appetite, and clearly demand and supply to play a role in short-term premiums. We saw that played out even in what is known as the EFP. That is, there was no supply to the futures market. Therefore, the delivery-based contract did insist on a huge premium at some stage. So, barring such instances where completely logistics is affected, in the short run, demand and supply are more a reaction to prices. Prices are determined by financial and economic factors such as interest rates primarily and other anxieties and risk appetite, which drive the risk appetite. Therefore, when you say how will the demand play out on prices and the global scenario, as we see, first of all, as I said, leave out the impact on prices. Mining supply was down. Now that's coming back. Again, COVID impact is waning there. And demand in many markets are reported to be coming back clearly. Second is that consumers have also got used to these high price levels. See, let's not forget, in every currency last year, prices have gone up by at least 25%. In India, it is 32%, right? And in every currency, it is lifetime high. Therefore, and the consumers had problems on keeping the jobs, their compensations, their earnings, everything was affected because of COVID, right? So a combination of these two, when you have less incomes and or less certainty about income and high gold prices, did affect the demand. Now, all that is slightly getting reversed. I wouldn't say it's all solved, but it is getting reversed. So 2021 will certainly see across markets a better scenario than 2020. There is no doubt about it. But as we said, it is still fraught with a lot of uncertain events. We have to wait and see.
Right. And with the rationalization of import duty on gold to around 10.75 from a 12.5, how big a positive is that going to be? And do you think there could be more such cuts that could make bullion and, one of the most favorite asset classes as well?
Well, bullion is one of the most favored asset classes now. But having said that, yes, see, net impact of this cut, including GST, is 2.19%. Okay? If you take GST also, compared with the past was 16.26. Now it is 14.07. So that's the net impact now. But hidden inside this is an agri and infra cess, which is 2.5%. So you expect this 2.5 to go away sometime in the future. So that will obviously flow into a further reduction in the duty. There's no doubt. So the expectation is, yes, there will be further cuts. Right now, what is the duty? If you say it is 7.5%.
Correct.
Right? So I think we should have a drop even below this, and probably other factors in gold, such as standards, bullion exchange, the velocity of turnover, infrastructure for manufacturing, innovation, all this will probably take precedence. So that's probably what we expect in the next few years. If
Right.
you
Right. And Mr. Somasundaram, how big a positive will this be to boost exports and make us globally viable and competitive?
See, as a duty cut for exports, you always had a duty drawback. I mean, or you are producing out of duty-free zones. Okay. The problem there was more about the operational procedures. I mean, a duty drawback took a longer time. EOIZs had plenty of controls to make sure that they don't use the gold, which is duty free, to sell it in the domestic market. There had to be a lot of controls. So they were operational. The duty never affected exports in a sense. The operational procedures affected exports. Having said that, right now there are lots of steps being taken to make it the ease of business, even for exporters. And the lower duty will always mean a better working capital management for those expecting duty drawbacks, etc. That's all. But is it going to make a very significant impact? No. But is it going to make definitely a favorable impact? Yes.
Right. And then with this, the moment our purchases increase with regards to imports as well, do you think that's something which could impact the country's trade deficit and weigh on the rupee?
Well, at the moment, our foreign exchange reserves, I think we are sitting pretty with this. And we have also, don't forget, 2020 has been one of the lowest years. We saw very similar to demand, a significant drop in imports as well. So to that extent, I don't think immediate run there is any big risk of gold causing a significant issue either on the rupee or on the foreign exchange reserves. So we have a window of time when probably this will not be a significant issue.
Right. And in terms of very lastly on the price trend of gold, how are you seeing it from here on? Because there is a lot of confusion that we've reached such record highs that where do you see gold stabilizing, number one? And number two, what's the kind of up move that we are expecting?
Well, as you know, we don't forecast prices.
I know, correct,
clearly.
Correct.
Let's look at the issues at play. As I said, prices are driven by interest rates because interest rates decide the opportunity cost and the alternative investments, etc. Liquidity, uncertainty, the global uncertainties. None of these have gone away. We are at an ultra low interest rate scenario across the globe. Every economy has said they will pump in as much money as is required to make sure that there is sufficient liquidity and there is no major issues of businesses failing. All that kind of stuff means that we are going to see this stimulus at high levels for a time to come, which is unless matched by immediate rise in productivity, which is unlikely, and global trade, okay, which is again unlikely because global trade is also affected by logistics. We are going to see liquidity-driven asset prices, and they always pose risks. Okay. And whenever there is a high risk, you will tend to see gold having a very significant role in the portfolio. So to that extent, so to answer your question indirectly, factors are very favorable to gold. But at which point, next quarter, what will be the prices is very difficult to tell.
Correct.
But if you are to take a step back and look at the macro scenario and see what is driving all these asset prices, are they backed by real productivity increase, profit increase? And then you say, then what happens if there is even a bubble here and there? Then you look at it and say that, gold becomes a good diversifier for many, many reasons. So to that extent, what we look at is next few years are very, very good for gold.
Right. And very lastly, overall, if you go to see, we've seen rationalization of duties that have come through. Anything else, according to you, that needs to be done? Number one, to increase investments further and to increase consumer demand?
Yeah, as we said that the government actually is not against demand, but they are again they want more recycling. They want more domestic supply, gold monetization scheme, and things like that. And they want people to use as much of gold through the financial system. Therefore, there is liquidity. They're not saying don't invest in gold, so invest through the mainstream. But there are not many avenues. So, in terms of steps, yes, banks coming in a big way in bullion, buying, selling coins, bars, opening gold-based financial products. That would actually take the gold-based savings into the banking system. Second, we definitely need the exchanges because the OTC trade is not quite helpful if you have to play a global, role in gold. So the exchanges are important. Clearly, the investments, both from the industry and the push from the government, should be towards better infrastructure on innovation. We still make good jewelry, handcrafted jewelry, but the situation of, if you look at the Niti Aayog report on the workmen, the skills artisans, it's very pathetic. So you need definitely to build infrastructure for better manufacturing, innovation, and a better marketing towards millennials.
Absolutely. I think a lot of steps still need to be taken to promote it. Thank you, Mr. Somasundaram, so much for joining us on the show. Pleasure to have you. Great insights, and hoping that all asset classes evolve like this as post-COVID is well, and we reach pre-COVID levels pretty soon. Thank you so much, and stay safe.
Thank you.